Hey, good morning, team. It is Tuesday, September 10th. I'm Amy Corr. I'm here with Kevin Van Eck, and we are live out of the Goose Island office. We have a great episode today because we are going to be talking about a site and a resource that we both love. It's called KCM, Keeping Current Matters. I know many of you have heard about this before, but we thought it was time to take a look at what they are talking about as it relates to real estate and their projections moving into fall and into next year. So grab your cup of coffee and let's jump into the next episode of Coffee with Amy and Kevin.
Good morning, everybody. Yes, we're going to talk about KCM, Keeping Current Matters. We've mentioned them, I don't know how many times since coffee has started. And fun fact, we actually started following KCM in 2010, 11, 12.
Yep.
This was during the downturn.
When we desperately needed information on what should we be telling our agents about the market, right?
Absolutely. And that's where we found them to be a good source. They have the information, right? And then they also have these wonderful charts and graphs and things we can use to show versus tell, which is something we talk about often. Yeah. And then they also make it really easy for us to convey the information to our clients, right? So it distills down all this complicated information or complicated projections, whether it's from financial analysts or from other economists, being able to take that information and show our clients or prospects, use that information in our daily business. Yep. So it's been really valuable. And we need to say it, we're bringing KCM to us.
That's right.
So Keeping Current Matters, David Childers, who's the CEO, is visiting us at Properties in Chicago and throughout the suburbs for all of our agent summits. So let's talk about, because there's a special phrase that I know that they use that you really like.
There is a phrase that they use that I absolutely love. And it's their motto. When you get to their site all the time, you will see it. It says, most agents know what's happening, we hope. Good agents understand what's happening, but only great agents can explain what's happening. And that's what I love, because their whole idea behind their philosophy in their mission is making sure that agents are great educators. They are big believers that the best way to build your client base, to build your business, is to come from a space of educating. And what I like is that they in turn are really helping to educate us. They break down really complicated things as it relates to the economy, the financial markets, and they synthesize it into beautiful slides, really easy bullet points. They also get great information from economists, chief financial advisors, all of these things, and they put it into their monthly reports. They actually do weekly reports as well. But that's what I love about it, is it allows us to take those nuggets. They do the hard stuff of getting all of that tough information and making it really consumer friendly. Right. So we can take it, learn it as an agent, and be able to use it when we're talking to our clients, right?
Yeah, and it sounds like this is a commercial for KCM. It is. But the only reason it is we're pushing it is because it's valuable.
Yeah,
yes,
we've used it for
really
years.
Easy to be an advisor. Mm-hmm. So why make it difficult and try and distill down all these other articles and information you're reading when you have this tool available? And we found it valuable, like we said, for the last 12 years at least.
Yeah, it's been a great resource.
Absolutely. So one of the things that they're predicting, or that they talk about, at least currently, is interest rates, right? Mm-hmm. This has been a hot topic for the last 24 months now. Yeah. And so with interest rates, it all depends. The economy is a hard thing to explain. They really break it down. So in there, there's some slides that you can check out, but really what they're predicting through the end of the year is still going to be a little bit volatile, but they're not looking at rates increasing past this point. In fact, in August we saw it dip to the lowest mark since February.
Since February of this year. Yeah.
So with that, and with September, and the earning or the employment numbers and all the other different factors that are coming out are going to shift the way the Fed responds. Whether 2 or 3 times through the remainder of the year they continue to dip, it depends on the health of the economy. There's a lot of factors that go into it, but KCM has made it really simple to be able to explain. So in terms of prediction, what are they predicting? We don't know, other than the Fed is taking action and taking quick action based upon the economy and the numbers that come back.
Yeah, and I would say keep watching what they're reporting on, because I think, they try to get as real time as possible, because again, I think we're going to see some curious stuff as we move further into this fall market, into the end of the year. We've got an election going on, so they talk about how all of these dynamics come into play as it relates to rates. And then, they also are talking a lot about inventory. inventory, right? Which is, I think, another big thing for so many of us, because if inventory can just open up a little bit, it could really help our buyers out there, right? And what they are talking about is that I think we're kind of at this tipping point. Now, they do say it might be a slow tipping point, but that we are starting to see that inventory, because rates are, projected to come down even more so, that these sellers are getting back into the marketplace. And they, let's face it, people can only hold off from life for so long, and yes, they've been sitting on great rates and a great property and not wanting to move. But I think as we're going to see this rate movement happening, we're going to start seeing inventory coming onto the market. And we want that to happen, right? A little bit more balance would be a good thing. And what that might also mean, though, is as more property comes on in some markets, we're going to see some price adjusting, right? There isn't such pent-up demand. So that is going to be a good thing. So really starting to see, I think, that sellers are going to be re-engaging into the potential of getting back into the market. They want to make a move, so they are going to, think about putting their properties on. So that's something, again, they're talking about and projecting that we are going to see into this fall market, but even more importantly as we move into 2025.
Yeah, more opportunity for us to work with clients, right? More buyers and sellers out there, which is a win for everybody.
Yeah.
And speaking of pricing and price adjustments, talking about appreciation, right? So we had this unsustainable level of appreciation after the pandemic.
Yeah.
And what they're saying at KCM is that things are going to normalize. So it might feel like things are really slowing down when really they're getting back to more of a historical average when it comes to appreciation. And I remember KCM back in the day, they had created a chart of 1890 to the present, and it reflected the Case-Shiller index and price appreciation. And it was interesting because through all of the spikes or dips, the average was about 3%. And that's what they're predicting essentially we're going to go back to, which is just below 3%. I think it's a 2.7% appreciation that they're saying. So we'll get back to more of a sustainable, more not necessarily affordability, but we won't see the price increases that we've seen in a lot of the markets over the last 3, 4, 5 years.
Yeah. And that might also get sellers off the sidelines too, because if there is suddenly this idea that, wow, where I'm at right now, if I enter the market, is going to be one of the best prices I'm going to get, let me get there now, right? And then obviously, as we get more sellers into the market, it may settle down. But again, this has been a great run, but, and appreciation has been amazing, but it hasn't been a healthy market, right? It's been really solid for sellers, really challenging for buyers, and really hard for agents. And so, I think for all of us, if we can get some inventory into the marketplace, if we can see some adjustment in rates, it's going to bring us back to a little bit more of an equilibrium, which is going to be a healthier market for all of us. So, no one has a crystal ball, but I do think that we are seeing signs that we might be getting there. Maybe not this fall, but maybe as we move into 2025. And then I think the other thing that they talk a lot about over and over again, and they've been talking about this for the last 3, almost 4 years, is that we are not in the same market or headspace as we were in 08, 09, and 2010. I know there's so many people that are afraid of this being a bubble, that at some point prices are going to crash, values are going to go down, and people are going to be underwater. They have a great chart that shows just how much equity homeowners have right now. Owning real estate is one of the best opportunities for people right now, because over the last 3 to 4 years, they've built so much equity into their property. So when you look at it, the loan percentages and what they owe back to the banks is so much lower than the amount of value of cash value that they have sitting in their home. So, real estate is in a really strong space right now. Homeowners are. It gives them the opportunity to make really good, healthy moves, which is great for us. We just need to kind of get them moving, right?
That's right. Yep. And then one of the things with KCM that I find really valuable is we talked about being able to serve up information and charts and data. One of the things that really we talk about from time to time is how do you follow up with prospects? How do you follow up with your database with something of value? And instead of just sending hey, I'm checking in to see if you need anything, which is the worst possible thing you could probably say, because it means nothing and there's no call to action to respond to it, because they probably don't need anything from you right now. So what can you do? You can provide other information. So I know recently KCM had something about, let's call it the capital gains tax, right? or other information when it comes to 1031 exchanges, or when it comes to all this different information where you can be a true advisor and educate them on something, provide something of value that's not just a check-in, that's not asking if they need help or support with anything. You're sending something that's interesting. And again, it's something of value, so they're more likely to respond or reach out to you.
Yeah.
And a hot tip with this stuff too, think about, you brought up pricing and inventory. We talked about interest rates and appreciation. These are all sound bites. If you have the information, these are sound bites, and oftentimes the most frequently asked questions we get.
Yeah. What
do you think is going to happen to rates? So hot tip, I would check the interest rate. I would check it every morning so that you're not guessing when people ask, what's the interest rate at today? And you're like, oh, I don't know, somewhere in the 6s. Actually know the number every morning. And then understand too that with those questions, be able to explain a little bit deeper. So follow some of these topics, and KCM makes it easy.
It does. I mean, it made us sound smart today, right?
Yes. 100%. Hopefully, you tell us in the comments.
Yeah, let us know. Let us know. But I love this resource. It's something that I've used for years. We're using it as we move forward into business planning in October. Yes. But again, this is about being an educator and feeling really comfortable that you can explain a lot of the complicated stuff that's going on right now. So we hope you enjoyed this episode of Coffee. Make it a great Tuesday. Until we see you next time, though, remember, you got this.